Hey guys, we're back again. Second session. Last week, huge success. We're really excited. We had over 1,000 people touched. Over 500 people watched our video. The feedback you guys gave was great. So we're really excited about talking today, the pre-approval process, what it's all about, and why you need one. So, John, if you want to start with that.
Yeah, John Faria from Province Mortgage. Thanks for joining us again this week, guys. What we're going to discuss, or the point of today, is to answer any questions you might have about the pre-approval process. And first, I'm gonna say with confidence that I know that a lot of you out there are probably a little bit nervous about going through that, thinking, "Oh, what if I'm not ready, or what if I don't know what to say?" So, I think the first lesson that we want to talk about is it's not a big deal, guys. It's literally as simple as a phone conversation that you're going to have with somebody like myself, who's going to ask you questions about why you qualify. Things like what you do for work, how long have you been there, what do you have in the bank, how is your credit? So questions like that, really simple. What is a pre-approval? A pre-approval, simply put, is a lender reviewing your qualifications to determine if you are eligible or if you qualify for financing. There's a couple stages to it. The first one, of course, is a conversation, and then it's followed by a review of your documentation to verify the information you had given us. So, like I said before, really painless process, guys. Can be done in as little as 15 to 20 minutes. And really, there's a couple different ways that you could do it. You could do it by phone, in person, and also we have a secure online application that you could do as well. But at the end of the day, it's really important that we have a conversation or in-person meeting to really go through all the different details of your situation. So, why do you need one is an important question to ask, and I think best answered by a realtor. Why is it important to have a pre-approval?
Well, it's really all about putting you in the best buying position that you can be in. Basically, if this year is anything like last year, we had situations where multiple offers, 60 people bidding on the same house, and quite frankly, there wasn't a lot of time. So that's why we stress this, and we're doing two independent videos all about the pre-approval. Last week we talked about it a lot. This week we're going over it again because it's that important for you as the buyer to be ready, to not waste any time, because you don't sometimes have those 2 or 3 days that you feel like, gathering up your stuff, getting ready. So we want to stress that to you now so that you're in the best buying position you can be in. And quite frankly, it shows the seller that you're serious. It shows them that you're in a position where, it's great if you throw out an offer, but if you get any surprises along the way, well, then really your offer wasn't valid. So it's really just a matter of putting you ready to go, best possible position, so you can negotiate the best deal for yourself, and really not find yourself struggling to catch up. Because if you're late to the party in a multiple offer situation, you're going to be the one who's actually bidding higher to try to get it. So you want to be ready to go right up front.
And I think that's a valid point. Is that the person who's ready with that pre-approval and can get their offer in not only quicker but more complete, I think has much better odds of being able to have their offer accepted.
Absolutely.
Somebody that is ready to go and doesn't have to wait until the deadline to be able to submit it because they have to now speak to a lender. Because, I had mentioned earlier that the process can take as little as 15 or 20 minutes, but in certain circumstances, if you're self-employed or maybe there's a couple different nuances to your situation, well, it could take, I might need to look at your documentation before I can issue an official pre-approval. So it's important to get ahead of it. And I think, not to be redundant and cover things that we did last week, but, what if there's something on your application or on your credit that I could have helped you to improve or to address ahead of time? You certainly don't want to find the home, fall in love with it, try to make your offer and then have it, find out that you don't have a pre-approval to accompany it because you weren't quite ready. So,
well, and the other thing too, if I can chime in on that, is that it also allows you to compare the different loan programs.
You bet.
Up front, going in. So maybe, you feel you're comfortable buying something in the $250,000 range, but another program, the payment comes out a little bit lower, so all of a sudden you can go $255, $260. So you can go in a little bit stronger and maybe avoid that bidding war situation.
Because I know in a future episode, I'm sure we're going to cover the cost associated with the financing and it's really, we're talking dollars and cents when the difference between going up with your offer 5,000 in order to get that home you really like. I mean, we talk about it every day, and the impact is so minimal. But as a consumer, I can understand you're thinking, geez, I don't want to go up another 5,000, but it's really pretty trivial, the amount, and it's important that you know that ahead of time.
Absolutely.
So, when you obtain the pre-approval, like I said, the process can take as little as 15, 20-minute phone conversation, could take a day. So it's always important for you to try to get ahead of it and make sure that that you're ahead of the game and you know all the different details of your pre-approval. How long it lasts for really depends on. It's really mostly credit related. Credit is good for a 90-day period. So at any point, a lender like myself, if it takes you 6 months to find a home, we're not going to pull your credit every 90 days and keep putting on inquiries for you. But it's important for you to understand that, after a 75-day period, I mean, we should be communicating more frequently than that anyways. But at that point, we want to make sure nothing has changed. You haven't gone out and financed something new that might jeopardize or impact your affordability. So the straightforward answer is 90 days for how long a pre-approval lasts. Of course, it may vary based on your situation. You found a new job, you had lost a job, or maybe you have more assets. So it's important to have, I think the takeaway, communication is key. Make sure that you're communicating with your lender if anything changes, or more importantly, before you pull the trigger and you make a large deposit, you sell a boat, and all of a sudden you got a $10,000 check and you just dump it in your account. Well, it's important that you call first and find out what you should do with that money. And that's all about the preparation. Again, the process is really simple and painless. Some things that you should consider doing before contacting the lender as far as preparation. Whenever I go through the pre-approval process, of course I'm going to talk about your qualifications, things that are going to help you to qualify for the loan. But I think the most important thing that I do, or part of our conversation, is talking about your goals and objectives. So I think before you contact a lender, you should have a general idea of what you're trying to accomplish, because at the end of the day, if I don't know what you're trying to do, there's no way that I can help you out and get you into the best loan product for you and your family. So some of those questions that you want to be asking, or asking yourself and preparing before you call a lender, is a general idea of what type of property you want to buy, and of course the state in which you want to do it. So there's a slew of different types of properties that you can buy, and I'll pass it over to Chris as far as some of the different ones and how it could impact the situation.
Some of the things you always want to look at too is, are you prepared to build some sweat equity? Mm-hmm. Are you looking for a fixer-upper? Are you looking for an investment property? Are you looking for a multifamily, something that you can actually generate a little income from?
Sure.
Or do you want a condo that's maintenance-free where someone else is doing all the work for you?
Mm-hmm.
So there's definitely a lot of those things to consider, and each type of loan, each type of purchase, there's different nuances to it.
Different requirements for
absolutely.
different properties. The down payment requirement might be larger for a 3-family than it would be a single family.
Sure.
Or specific to condos, we know how with certain loan products, the condominium needs to meet certain qualification criteria as well. So,
not to mention condo fees.
HOA dues,
Sure.
Homeowners association dues are another thing that you need to take into
towns, just locations alone. I mean, the tax rates. Nothing's going to impact your purchasability more than a very large swing in property taxes.
Yeah, you bet.
Because that's a real simple math formula, not to cross into your lane and talk
It's okay.
about math, but
That's all right.
Divide it by 12 and that's your monthly tax payment. It's as simple as that.
Yeah.
So if you're adding $1,200 to your taxes, you're going up $100 a month on your purchase.
And it varies significantly just from town to town. I mean, you can be
Absolutely.
in the same county and see a very drastic difference in property taxes, or to Lori's point, homeowners association dues. One complex could have a $200 a month association due, and then you go to another and it's $350. So
And
all
they factor
important
that in,
aspects.
right, for the debt to income?
Oh, of
number?
course, yeah, absolutely. It's part of the monthly mortgage payment. So when we qualify you, it's based on your total housing payment, and things like property taxes, homeowners insurance, and HOA dues, if you have them, are all factored in. So it affects your affordability too.
I'm just going to quickly, digress here, but a lot of these things that we're talking about right now are the questions we get hit with on a daily basis throughout the project. You start with someone, they're looking for a raised ranch in Franklin, and the next thing you know, they're looking in, Bellingham for a townhouse.
Yeah.
And that's okay. And that's one of the reasons why this is a process. It's not just You go out, despite what you may see on TV, you don't go out and look at 3 homes. Pick one. And write your offer, and magically it's accepted in 30 minutes.
Right.
There is a process to this, and we all know that it changes along the way, and things will vary, and your whole situation could change halfway through the process, and that's okay.
Yeah.
But that's why talking about your pre-approval, your options, knowing how much you can afford is going to change all of those things.
Definitely. And to your point, there's never a wrong answer to this, guys. And we're talking about what you should do to prep before you speak to a lender. If you don't know what type of property you want to buy, that's quite all right. I mean, maybe you want to find out some of the different nuances to getting into a property like that before you can confidently say that, yes, I want to be in a condominium, or yes, I want to buy a multifamily. You might speak to somebody like myself and find out that maybe I'm not ready for a multi or what have you. So the takeaway is there's never a wrong answer, right? We're talking about what your goals and objectives are, and maybe it's not totally clear yet at the very beginning stages, but the realtor and the lender as resources to you will help to answer any questions, fill in any blanks, so that you can then confidently say, yes, this is kind of what I'm looking at, narrow down your margin, and have better success with finding it. So,
and the whole goal of us doing this is, again, we know that as more and more people are tuning in, we're hoping that the questions will start to flow in. So please, as we're saying things, if it seems like we're glossing over, because we're trying to keep this 30 minutes and just keep it informational for you, and maybe even spark some questions that you didn't even know you had.
Right.
So don't be afraid to follow up with us. We had some great questions after the fact.
That's fine as well.
From the last session, people went on, and we're checking that. We're checking for the questions. We're replying right away. So don't be afraid if all of a sudden something we say tonight, tomorrow you say, I never thought of that.
Right.
Go ahead and ask the question and reach out. And again, we want this to be as interactive and as non-threatening as it can possibly be. Right. So we're here, we're answering your questions. If you're working with somebody else, or you already have a brother-in-law who's a realtor, that's okay. We'll still answer the questions for you.
Right.
You're tuning into us for a reason. We want to help you.
Yeah, absolutely. And it's not uncommon for you to finish watching something like this, or get off of the phone with one of us and say, oh, wish I had asked that question. So you got to understand that you're invited to reach out to us even after the fact, or live, whatever's easier for you. So some other things you should keep in mind or have prepared before you speak to a lender. And again, no wrong answer, but a general idea of how much you're looking to spend. I mean, nowadays with technology, a lot of people are out there and they're looking, or maybe you're driving around and you see an open house and you want to bop into it. You should have a general idea, I believe, and I might be off here, you might disagree, but have a general idea of how much you want to spend. If you're looking to buy in a certain town, you should have an idea of how much X amount of dollars is going to get you in that town. And again, it's okay if you don't. A lot of my clients, when I ask that question, will be like, well, geez, I was kind of waiting for you to tell me, John. And it's not as if I'm going to tell them, but I will explain to them what your maximum purchase power is, and then, of course, based on the info that you give me here, how much you should be shopping for based on your budget. So, general idea of what your purchase price is going to be. The next and most important one, and this one you should know when you call, is have a strong understanding of what your budget is, how much you can comfortably afford. I think before you make any financial move, even if it's an automobile or you're going to take a vacation or something along those lines, I think it's important for you to know how much you can afford. And this happens to be a reoccurring liability, and one that's going to be there for quite a long period of time. So I would highly advise that you sit down and do your budget. You know what you make every week. You know what your monthly expenditures are, and I know it's probably not something you want to do on a Friday or a Saturday night, but maybe some Saturday or Sunday morning before you start this process, you sit down and you be truthful to yourself as far as how much you can afford, because that is going to be the key to what I base where you should be shopping for. If you tell me I can afford $1,500 a month, I'm going to tell you what that's going to get for you based on where you're looking to purchase.
And I believe we said this last week, but again, I think it's one of those things that I'll say repeatedly. If you're currently paying $1,200 a month in rent, and you feel like you can comfortably afford $1,600, do yourself a favor, start paying that now.
Yeah.
Pay your $1,200 in rent, put $400 aside for yourself, and prove it to yourself. One of the most important things in this whole process is you'll know you're comfortable.
Right.
You do that for 6 months and your confidence level will go up. The nerve factor that you'll have about making that commitment about buying a house
Will be gone.
will be gone, because you'll know, hey, I've done this for 6 months. It hasn't impacted me. I haven't had to skip my Dunkin' Donuts. You know, and
Yeah, right. Who could do
Don't
such
skip
a
what,
Dunkin'.
skipping Dunkin' Donuts?
Don't skip Dunkin'.
Maybe give up with the crawler. You know, who knows? But
Skip the crawler every Wednesday and you'll be all right.
But no, I mean that's a huge thing, because a lot of people will say, "I'm comfortable doing 1,600," and they're paying, you know, they're living with family, and they're not saving money.
Yeah.
You know, what's the worst that happens in this? 6 months later, you put away that $400, and you know you've got $2,400 in the bank, and
Right.
you go on that vacation because you change your mind.
Yeah.
You know, living like you have to pay it now will prove to you that you can do it later.
Right, and really, you know, to your point, it helps you out twofold. Number one, it gets you prepared to make that payment in the future, so you get that confidence factor, and you know you can do it. And then secondly, you know, it's forced savings, right? If that margin is $400 a month, you're putting away $400 a month. That just adds on to your assets, and whether or not you actually use it towards the transaction is one thing or the other, but at least you're saving that money. You have it set aside, whether you use it for reserves or maybe that vacation or whatever you
It
want.
could end up being the new living room set. for
Yeah,
the
there you
house.
go.
I mean,
Yeah.
whatever.
Instead of financing it, you
Exactly.
can go out and buy
Whatever
it.
you do with it is up to you.
Yeah.
But it's just, again, I think from doing this and working with people, there's a fear that comes along with, can I actually afford it? I know you're telling me that I can do it, John.
Yeah.
You know, Chris is showing me that we can do it. But the reality is, if you can't pay it to yourself, then maybe you really shouldn't be
Yeah,
doing it.
maybe you should gear it back a little bit.
Exactly. So that's the whole goal of that lesson,
Yeah.
is to make yourself comfortable.
Yeah, and it's the single most important question that's going to be asked of you, because really that's what we're going to use to determine where you should be shopping. So another thing, you know, the other bullet point you want to be conscious of is equally important too, a strong understanding of how much money you can comfortably put towards a transaction. So I use the word comfortably put towards a transaction. I don't like to see my clients rubbing every nickel they have and flipping over the couch to get every spare quarter and dime that they have in order to put towards buying a home. Because let's face it, there's responsibilities associated with owning a home. It's a heck of a nice way to start when you have some reserves and you have some left over. So when I say strong understanding of funds towards transaction, I don't leave that just a down payment. And there's a big misconception, I run into this a lot, speaking with people, that, you know, it's not just about your down payment. There's other factors associated, or costs
Closing costs.
associated with buying a home. Of course, it's different when you refinance, but when you're purchasing a home, you have to worry about your closing costs and paying for your property taxes and homeowners insurance ahead of time. So
Home inspection,
yeah.
appraisal fee.
Sure.
There's a lot of
You bet.
little things that add up along the way. So
Yeah.
being prepared for those and sitting down and learning what those are is important.
So if your goal is to put 10% down, understand that you're probably going to need more than just that 10% of your purchase price. You know, there's other costs, and if you speak to a lender ahead of time, you're going to be able to wrap your head around what that number is.
Right.
And it's also, again, just like the budget, going to help the lender to be able to instruct you or guide you along the right way so that you can comfortably afford the home that you're buying.
Yeah.
So, very important thing. And then the last question that I typically will ask, and you know, the ideal answer for this is I'm not in a rush, but it's time frame. You know, are there any outside factors such as, you know, are you in a lease and it's going to end in August, or do you want to get into a school system before September? Things of that nature are important for us to know.
Sure.
You know, arguably more so the realtor than it is the lender, but you know, certainly things that a good team, realtor and lender, are going to communicate with one another and remind each other that, hey, listen, you know, Julie needs to get into the new school system, so she needs to get in by July. So it'll help us to be able to tell you, hey, Julie, we really got to start getting out a little bit more often. It's June. We want to get moving on finding you a home right away. So again, that falls into the communication category, which is paramount in the process.
Absolutely.
So, you know, documentation is always a key. It's kind of I break it into, because this can be overwhelming. I get it, guys. I understand that, you know, it's not your favorite thing to do to speak to a lender and apply for financing. So I like to break it down into sections. The first one is pretty much what we covered. We're going to talk about your qualifications, talk about your goals and objectives. Generally, I do that by phone or oftentimes in person, depends on your preference. From there, I provide you a general list of documentation that you'll need to gather up so I can verify those qualifications. So if you tell me that you make $60,000 a year, well, you know, having a pay stub and a W-2 that confirms or verifies that is important for me to be able to issue that pre-approval with confidence because.
Question.
Sure.
If somebody say they are bopping around going to an open house, right?
Yes.
They don't have a pre-approval.
Mhm.
It's a Saturday.
Mhm.
They need to get a pre-approval because it happened to me this weekend.
Oh yeah.
My buyers lost the house because they weren't ready.
Mm-hmm.
What do you need immediately from somebody to issue a pre-approval letter within a few hours?
At a bare bones minimum, we're going to at least need to see pay stubs and income related docs to answer your
Okay.
question. So pay stubs and W-2s or
So somebody can call you, go through their whole thing with
Absolutely.
you. You can pull it
and I
and
can't.
get them a letter.
More times than not, I'm getting those Saturday and Sunday phone
Yeah.
calls
Yeah, we
because my lender doesn't work on Saturdays or Sundays, or geez, I wasn't really ready, and I didn't realize I was going to find the home.
Sure.
And that happens too, guys. I mean,
It
how many
just
people
happened.
did you think that were like, I'm going to wait until
It happens
June?
more often than not, which is why I think if people
Yeah,
knew
sure.
what they need, you know what I mean? They might not be ready to sit down with a mortgage guy, but
Mm-hmm.
you know what I mean, or a person, whatever. But they should have some of their pay stubs ready. They
Always.
should have something so that if they do need to hit the ground running,
Yeah.
you can get that.
Yeah, and that's not to encourage people to wait until the last minute and you find the home
Right,
because
but
you
it
are putting
happens.
yourself at a disadvantage, but it does happen. But to your point, and this is a great one, I didn't even have it, in my mind to say, but if you know you're buying a home, you should at the very least be putting aside the last 2 years worth of your income taxes and your W-2s, and ideally, if you find yourself in that type of predicament where you need to get it off right away, perhaps having it scanned into your computer so you have it
There
at
you
a
go.
quick dime, saving pay stubs. And
John, do you think we'd be able to post a list of
Sure.
documents?
Yeah, I can forward
So in the
you
next
over
day or
a
two, we'll
checklist.
actually post that
Mhm.
right here on Key to the Dreams Facebook page.
Yeah.
So if anybody wants that, it'll be ready
That's
for
a
you.
good idea for a
Yeah.
document list.
And just to give you, a general idea or feel of it, lenders are going to need 2 years worth of your federal income tax returns and the W-2s to go with it, a month's worth of your pay stubs, 2 months worth of your bank statements. So,
Yeah.
there's a misconception that we need, blood and urine samples and all of those things. We really don't. At
You
the,
took it out from my last client.
well, that was a personal bit. No. But at the end of the day, it's really pretty simple. I mean, we're talking about you qualifying for a loan based on what you make and what you have in the bank and what your credit is. So yes, we're going to need to verify that info,
Sure.
and that I think taxes and pay stubs do a pretty darn good job of it. Of course, it may vary. If you're self-employed, we might need a little bit more. If you have a unique income source, we might need a couple additional things.
if you're
But-
using down payment money from a 401k or things like
Yeah,
that.
or
you have
gift.
Gifts,
You
money.
can get gifts from a
money.
relative, and
Yeah.
obviously we need to source that money. So
It is okay to hit your parents up for some more money. It's all right. We can work with that.
So that's the documentation required. I'll give these guys a checklist that they can certainly post on there so that you get a general idea. Because getting yourself prepared even before you speak to a lender is going to be in your best interest. Have your documentation ready. Have a good understanding of what your goals and objectives are. Where do I want to buy? What kind of home? What do I want for a general idea of purchase price? How much can I comfortably afford?
Yeah.
How much money do I have that I can put towards a transaction? And do I have any time restraints? Do I need to be in a home by a certain time? And you'll be in great shape. It's not no pain, I guarantee it. You're literally having a conversation with somebody, and if it's the right person, they're going to guide you along, and you should, at the end of the day, feel a heck of a lot more confident going into it, especially when you're making the biggest purchase of your life.
I think we should maybe pause for 10, 15 seconds here and see if anybody has any questions to come in.
Sure.
Give Laurie something to do over here.
She's been chiming in tonight.
She
man.
has been chiming in tonight.
I'm glad.
She's sitting here just waiting for those questions to come in, and I want to make sure that
Somebody,
we're
anybody.
breathing.
Yeah.
We're breathing, and that somebody, if anyone has one,
Yeah, it
just
actually
go
is
ahead.
live. It wasn't pre-recorded.
It
or
is.
anything.
It is live.
That's not in front of a
promise.
studio audience.
No, it is not today.
Yeah.
Not today.
Promise.
It is
If you want
closed
to just
captioning.
lob an insult at us, go right ahead. We'll read it out for you.
Or say, hey!
Yeah.
And we are waiting. So,
Oh my
all
god.
right. It looks like we're all right to go on then.
Yeah,
But
I think
I-
it's clear to go.
And I think the key takeaway, and we're about 24 minutes into it here, so we're right on schedule. The key takeaway, it's not difficult to apply for financing. There is no way where I sit here now for me to be able to tell you, oh yes, you absolutely do qualify, but you're never going to know unless you take that first step. And true story about me, when I was younger in my 20s, I had applied for my first mortgage loan, and unfortunately I didn't qualify at the time. But believe it or not, I cannot tell you the reason why I didn't qualify. The lender that I spoke to at the time never followed up with me and said, hey John, it's, maybe it's your income. Maybe you haven't been working at the same place long enough, or maybe it's your credit. I literally had no idea. And to me, that's kind of like a chip on my shoulder because, you know, when I look at people and I deal with any type of person, whether it's your first or your 10th time, if you're not ready, I'm going to tell you why. I'm not going to shy away from it and just tell you, no, you don't qualify right now. I'm going to explain to you, listen, you do not right now, but if you do X, Y, Z, you're in 90 days or however long.
So you can
feel
kind
it's
of
gonna
credit
take.
counsel, do the
Of
rapid
course,
rescore, and
do it all the
that
time.
stuff for
Do it all the time.
credit. So
And quite frankly, you know, that's actually arguably more rewarding when you take somebody, because at the end of the day, it's really the consumer who has to do the work and get it done, but they just need instruction. Because let's face it, there's not a course that you took in high school or college that covered credit.
Right.
You know, so, you know, use that to your advantage. I mean, the time that you spend trying to get pre-qualified, whether you do or you do not, should be beneficial to you. And at the end of the day, you're going to have.
And there have been times we've seen
Some more
people
info.
make credit errors.
Oh,
You
yeah.
know, trying to do the best because they have the best of intention
They just don't
to,
understand.
to fix things. You know, I'm going to close these accounts, or
Oh,
I'm
yeah.
going to, you know, again, like you said, there's no class. I mean, I'm sure there's information out there on how to do this, and you know, all those websites and all that stuff.
But it's
that you
all
see,
unique
but-
to one person's situation. You know,
Absolutely.
like opening up a new credit card may be the right advice for one particular person, but not so much you.
Right.
So I think it's okay to go online and to research and
Sure.
do it on your own. I get it. I mean, I do the same thing. But you want to make sure that somebody's unique to your situation.
There's
You
no
know, that-
one size fits all.
There isn't one size
and
fits
it's
all.
free.
with
If
credit.
somebody wants to call you and talk
Oh,
about
yeah.
a pre-approval, whether or not
Absolutely.
they can do it or not,
Never a charge.
doesn't cost a thing.
Never a charge.
Because I talk to a lot of people like, no, my credit's bad, my credit's bad, my credit's
How
bad.
do you know?
You know what? 9 times out of 10, when they go to the lender,
It's
they
not.
find out that it's not.
Yeah, right.
So-
Or, you know, moreover, okay, your credit's bad. It happens. I see
Right.
it all the time. So
Here's
now,
what
do you
you
know
gotta
what you
do.
do? Do
Right.
you know what you need to do?
Are you
the
going to
order
just
in
sit
which
there
you
and
do
let it be bad, or are
You
you
bet.
going to do something to take corrective action?
Because I think that's the key, is that it doesn't fix itself. I guarantee you. And the sooner that you act upon it and you start going through the steps to improve it, the sooner you'll start to see, you know, enhancement. You'll start to see that score go up. And let's face it, that greatly impacts not only, number one, your eligibility, but number two, and most importantly, the costs associated with the financing, the interest rate, for example. I mean, we're talking, in some cases, thousands, if not tens of thousands of dollars over the life of the loan, just because you took the time to get yourself in a really good, strong, credit-worthy position.
Absolutely.
So, you know, definitely worth your time, and at the least, you're going to be walking away with a little bit better understanding of how that
Right.
works. So never
Right
hurts.
at the 28-minute mark. So
Beautiful.
Well,
So,
so I
talk
think it's
about next
actually
week.
perfect. The reason
Yeah.
you know we did this into 2 sessions is because there is a lot involved in this, and this actually puts you in the best position for next week's session.
Yeah.
which is
Coincidentally, little
It's-
segue.
It's like we planned it.
Yeah.
You know, next week we're going to be talking about what you need to do to start the whole home buying process.
Yeah.
How do you get out there? You know, how do you go from an open house to actually submitting an offer?
Right.
How do you go from contacting myself or Laurie or you know any other realtor out there and saying, "Hey, I want to start this whole thing.
What do I do
I've
first?"
seen these listings online. What do I do now? What
Who
do I need?"
contact? Do I contact?
Sure.
You know what I mean? Because there's so many realtors out there, and it's like many people think that they can't
You
have
contact
their
us.
own agent,
You contact us.
and you can. We can show you any
Why
house
would you
that's
contact
there.
anyone else?
Well, because people don't understand that we can show any listing
Absolutely.
out there.
Oh yeah.
That is a
Absolutely.
big, big.
That's a
big
huge
thing.
misconception
That
out
is
there.
a
Yeah, a lot of
huge-
people think that, oh, well, she's got the listing or he's got the listing.
Right, so I
I
have
need
to
to call
use
them.
them.
No,
Right.
you use
No.
your realtor represents you and your best interests. So use
And
that
it
to
doesn't
your.
cost them anything.
It doesn't
Right.
cost them anything, and use that to your advantage. You know, let them open the doors for you and find the right home, because a lot of times the realtor has an inside. Well, not a lot of times they do have an inside scoop on what's out there, so they
Sure.
might have a word before anybody
And
else.
we have
does.
ways of finding.
and
Right.
you know, and we function as buyers
We have
agents,
ways.
and what that means, back to the last session, is buyers agent means that we work for you.
Yeah.
So we negotiate the best purchase price. We negotiate for the home inspection issues. We get you into the position to get the house on your terms. So I mean, we work on your behalf. That doesn't mean we're also not sellers agents, you know, because we are sellers agents. So if we have a listing and you come out and see it, you know, we would be representing that seller, but that doesn't mean you still can't submit an offer. So there's a lot of things that go into this. There's different nuances and different hats that we have to wear based on the role that we're playing for each and every person. So I actually think, personally, it's one of the biggest purchases you'll ever make.
Yeah.
So why not work with someone consistently throughout it and have that relationship? And again, the
The understanding.
communication going with the lender,
Yeah.
communication going with you. As things change in your situation, they're all working together to, bring that all together. And your buyer's agent should know, well, gee, this just changed for you. That's going to impact you. Let's
Right.
talk to John.
Right.
So,
Well, the communication, I'm going to say it a million times
Yep.
in these sessions. The communication is key, and really, as a consumer that's looking to purchase a home, you're building a team around you. I always use that word team when I'm speaking about the realtor that I'm working with, because ultimately that's what we are to you. A good team is going to represent you in the best way possible and make sure that you're getting or obtaining what you set out to obtain.
all right.
Based
So
on what you want.
basically, next week is the fun part. It's going out looking at the houses.
What, this wasn't fun?
Ah,
See? Nice.
It's a necessary
Nice.
evil.
Sure.
It's a certain
Nobody likes the mortgage
It's a
finance.
certain mindset that finds financing fun. But it's the taking those homes from the photos online and seeing them in person.
Yeah.
It's actually taking that first step, walking through a few doors, getting an idea of what you like and don't like.
Yeah.
Very often you'd be surprised. People, I want this, I want this, I want this.
Till they see
Next
it.
thing they go out and they see the house and they go, gee, I never even thought of that, and I love this. So there's a lot of fun that begins once you get through this part of it. And I know, okay,
Getting
John,
beat
I'm
up.
sorry. All right.
Beat up.
All right. Once you're done having your fun with John,
There you go.
You
Well
move
said,
on
Chris.
to your
Well
Trust me,
said.
realtor.
our job is way more fun.
It is. Well, in their defense, it is going out and shopping for the home. Essentially, is what
It
you're doing.
is,
Sure,
it's
that's
fun.
fun. I mean, I still
Trying
do
it
it now.
on.
I go to
Absolutely.
open houses all the time. I'm not in the market to buy a home, but
Yep.
I go out because I love homes. I love looking at
Sure.
the different styles and people's taste and things like that. So you're right.
And I don't want you to
but
get-
it's still fun talking to me.
It is. And I don't want people to get the wrong idea here. It's not that you can't go out and look at houses without the pre-approval in hand.
Very true.
It's sometimes just not in your best interest. And that's why we did 2 sessions on it, because it allows you to not fall in love with the house and have your heart broken because you're not ready.
32 minutes.
You never want to let that one be the house that gets away that you compare everything to.
Sure.
So be in the best position possible. So next week, tune in. We'll talk about the whole process, when the money comes in, when deposits come in, all of those things. When do you do the home inspection? We'll start talking about those things, and that's hopefully
Next week will be a
the
good one.
more fun part.
Yeah. So please tune in. When is it, Chris?
Tuesday.
Tuesday night,
So
6:30.
we did it tonight on Monday, and paying respect to Valentine's tomorrow. But just so you know, moving forward, it'll be on Tuesdays, 6:30. So please, thank you for tuning in, and please do next week as well.
And if you need us before Tuesday,
You
you know how to get us.
Yep, absolutely.
Thanks for joining us, guys. Have a great night.